Good evening. My name is Antonio Estalio, and today I'm going to train you regarding IFRS 16. But before we start, let's I'm going to introduce to you the training plan of this training session. First, uh, introduction of the trainer and the member of the seminar. After 15 minutes, uh, we are going to go with introduction for objectives of the seminar, give brief introduction of the IFRS 16, small background or conditioning the mind of attendees to give the best attention to the seminar. And then after 15 minutes, we will proceed with the content of the seminar. Okay. And today, I am your trainer. My name is Antonio Estalio again, and I work as accountant here in Dubai, United Arab Emirates. I'm doing this training session as my requirement in my subject to Dr. Janine Moneda de la Cruz. And I'm going to train you regarding IFRS 16. Okay, for our topic, let's go to training module. For our topic is IFRS 16, Unit of Competencies. Create a training module to be used in facilitating a seminar for IFRS 16. Introduction. This module talks about the IFRS 16, these new standards that Funworld Investment LLC should adopt in recording the lease commitment of the company. This module is designed to finance that would be affected by the changes made by IFRS 16. The full implementation of IFRS 16 should be covered by this module. The learning outcome. Upon completion of this module, Finance Department must be able to know what is IFRS 16. Second, understand why we should adopt the IFRS 16. Third, learn the basics of IFRS 16. And fourth, understand the overall implementation of IFRS 16. Learning outcome. Finance should learn how to create an entry using IFRS 16 standard. Okay, let's proceed to the content of this training session. IFRS 16 is an effective for annual reporting period beginning on or after 1st of January 2019 with earlier application permitted as long as IFRS 15 is also applied. The objective of IFRS 16 is to report the information that faithfully represent lease transactions, provide a basis for users of financial statement to assess the amount, timing, and uncertainty of cash flows using from leases. To meet the objective, a lessee should recognize assets and liabilities arising from the lease. IFRS 16 introduces a single lessee accounting model and requires a lessee to recognize assets and liabilities for all leases with a term of more than 12 months. unless the underlying asset is of low value. A lessee is required to recognize a right of use asset representing its right to use the underlying leased asset and the leased liability representing its obligation to make lease payments. A lessee measures right of use of assets similarly to other non-financial assets, such as property, plant, and equipment, and, and lease liabilities similarly to other financial liabilities. As a consequence, a lessee recognizes depreciation of the right of use of assets and interest on the lease liability. The depreciation would usually be on straight line basis. In the statement of cash flows, a lessee separates the total amount of cash paid into principal presented with financing activities and interest presented with earlier operating or financing activities in accordance with IAS 7. Assets and liabilities arising from lease are initially measured on a present value basis. The measurement includes a non-cancelable lease payments, including inflation-linked payments, and also includes payments to be made in optional periods if the lessee is reasonably certain to exercise an option to extend the lease or not to exercise an option to terminate the lease. The initial lease assets equal the lease liability in most cases. The lease asset is the right to use the underlying asset and is presented in the statement of financial position either as part of property, plant, and equipment or it is own line item. IFRS 16 substantially carries forward the lessor's accounting requirement in IA 17. Accordingly, a lessor continues to classify its lessees as operating lease or finance lease and to account for those two types of lessees differently. IFRS 16 replaces IA 17 effective January 1st, 2009, with earlier application permitted. IFRS 16 has the following transition provisions. Okay, in simple sense, the IFRS 16 is the new standard that we are going to recognize, that we are going to adopt in recording a lease. Before, if we used to record the rent as like debit rent expense and credit cash payments or liabilities, under IFRS 16, we must record the lease as initially as asset. Why? Because it is based on the concept that we are using absolutely using the asset for 5 years, for more than 1 year. That's why we have to recognize the lease, all the lease payments as assets. And how are we going to recognize the expense? Because we are paying rent maybe by quarterly, by annually. So we are going to recognize the lease, the rent expense through depreciation. So initially we are going to record all the lease payments as assets. And then we are going to amortize, or we're going to depreciate this asset by the number of lease terms. For example, you have an annual lease of 1 million, and you are going to pay it annually in advance and for 5 years. Meaning, beginning of your lease, at the beginning of your lease term, in the first year of your lease term, you are going to recognize an asset worth a present value of maybe closer to 5 million, and then you are going to divide it by 5. So whatever the quotient of that will be your depreciation, and that would be considered as your new rent expense. Unlike in the old or traditional way of recording the rent is what if you pay 1 million for a year, that would be your rent expense. Okay, Assessment criteria. The most important consideration in IFRS 16 are the following. We have four entries that must be considered in recording the IFRS 16 that the finance department must learn. First, at the beginning of the lease term, we are going to review the contract of the lease, whether it will be qualified as an IFRS 16 or can be considered as a normal lease or a traditional lease. The number one thing to be qualified as IFRS 16 is it must be an absolute lease with more than 1 year period, and the amount to be paid is known, meaning it's already defined from the beginning of the period. For example, you are going to lease the property for 5 years and you are going to pay it 1 million per year. That would be obviously qualified as IFRS 16. In the first entry, you are going to recognize debit asset, credit liability. Asset for the present value of the lease payments. I'm going to provide you the table for the computation of the net present value of the asset. And then credit to lease liability. Credit to lease liability is like based on the concept. It is based on the concept that you are obliged to pay your rent, for example, for 5 years. You are already obliged to pay your liability for 5 years. And then in second entry is installment of lease payments. What will be your entry when every time you pay? For example, you are paying annually 1 million annually. So your entry will be debit liability, credit accrued interest, and debit liability, debit accrued interest, and credit vendor contra account. What is this vendor contra account? Why we should credit this vendor contra account instead of cash? Because usually the installment is like, okay, we are going to pay our liability, we are going to debit our liability and credit the cash. The vendor contra account is based on the concept that normally we don't pay our rent in exact time. So because we are making our entry regularly, it's like based on the contract we're paying it on the first day of the year. So sometimes you fail to pay our rent at the beginning of the year, so we just close it to the vendor contra account, and the moment we pay the cash, and then that's the time we're going to debit this vendor contra account and credit the cash. And the third entry is the monthly interest expense recording. Why we have this monthly interest expense? Because we have only rent, and we don't have any liability that we have to recognize interest expense. Based on the first entry from the based on the IFRS 16 concept, from the very beginning of the lease term, we have to recognize our lease liability. So if we have a lease liability, basically we have to recognize an interest expense. So how we are going to compute this interest expense? The interest expense can be computed using the prevailing market value. It's like the market rate, the rate that we use to get the present value of the lease liability. For example, if we have a rent of 5 years and we are paying the annual rent for 1 million, in 5 years we have to pay an amount of with a face value of amount total of 5 million. But basically, if we are going to consider the market rate, the total payments, the total present value of our payments, or the total present value of our 5 million is not equal exactly 5 million, but it definitely will become lesser. For example, it will become 4.5 million only. So the difference of the total face value of payments, like 5 million less 4.5 million, is 500,000. That would be considered as your accrued interest. So you are going to amortize it in the life of in the lease term. And that's why we have our third entry, interest expense debit, and credit, accrued interest expense. So basically, accountants should understand these accounts, interest expense and accrued interest expense, and I don't want to reiterate it further. And the last entry is the monthly amortization of asset. The last entry is like, this is the time we are going to recognize our rent expense, but in the form of depreciation. In the form of depreciation, in the sense that based on IFRS 16, at the initial year, we recognize asset. So if we have asset, we have to amortize it, or we have to depreciate it divided by the number of lease term. So debit rent expense, accumulated depreciation of lease term dash rent expense, and credit the asset. Note, in initially adopting the rent, for example, we are already in July, and we made already our traditional rent recording from January 1st, 2019 to July, and we try to adapt this IFRS 16. What we're going to do is we have to reverse all the entries made of using traditional or operating lease style of recording from the 1st of January 2019 to July, and then we are going to record this IFRS 16. For our guide question for this training, what is IFRS 16? So it was defined a while ago. IFRS 16 is the new standard that we have to adopt for recording of our lease. That is recording initially the lease as asset, and then depreciate it over the lease term. The question is, why do we have to adopt it? Okay, basically, why do we have to adopt the IFRS 16? We don't have choice but to adopt it, but the explanation behind is, this is the more conservative way of recording. This is the more accrual way of recording the asset, the recording or reporting your financial statement. Because if you have a fixed rent contract for 5 years, it means that you have a liability to pay your rent for 5 years. This is non-cancellable lease, meaning you have to reflect it in your financial statement. You have to reflect that you have a liability for your lease. Unlike in traditional way of recording the lease, like operating lease, it's like, okay, I just have to record my liability unless lease liability, unless I fail to record the rent liability, where in fact you have actually a lease liability for 5 years already, because you signed the contract for 5 years already. And which department should be affected by the IFRS 16 standard? Basically and obviously, the finance department. And then, when should the standard be implemented? This standard be implemented starting January 1st, 2019. So today we are already in July. So whatever entry, whatever Funworld Investment LLC entry made from January 1st to July using traditional way of recording the rent expense will be reversed. Exactly whatever your entry, like for example, basic rent expense, debit rent expense, and credit cash, you have to reverse it just to reflect that this entry has been zero out. Checklist. Okay, what are our reference for using what are reference in IFRS 16 studies, or what are reference using using the IFRS 16 standards interpretation. We use the IFRS 16 standard interpretation by KPMG, the Wikipedia, accounts to be used by the new standards website, the entries to be made introduced by the KPMG. And that's it. And then for our assessment methods, for this training, our assessment methods will be the oral questioning and also the guide, the actual guide to finance department on how they are going to implement the financial statements. A recording of the IFRS 16.